Hey guys, Kimberly Janelle, your favorite tax strategist, tax planner, CEO of the Entrepreneurs Business Club. I have something that I want to break down for you today. It is something that I have noticed that people have a misconception about how your income works, how taxes work, specifically for business owners. I had one person say to me, well, why do I need to keep track of my expenses? Because my standard deduction, and I immediately recognized that they don't understand where the numbers go, what the numbers are, where they flow into the 1040 form. And so I'm going to break it down for you here in this video. So give me a moment. Let me get out of the way. Hopefully you guys can see this. So the 1040 form, okay? At the very top, of course, we know it asks a lot of information like your name, social security number, date of birth, all of that great stuff, right? We're going to enter that in. But then it starts asking about your income. So it asks for your wages. And wages come in the form of W-2 income. Okay? This is interest, taxable and tax-exempt interest. It also comes in the form of dividends. And then we got pensions and annuities, right? All of this is considered income. Boom. Okay. And Social Security, right? All of that is considered income. But then there's another form, Schedule 1, that asks for additional income. So do you got more money that came from somewhere? This information would be rental real estate, that would be included here. Royalties, that would also be trusts, okay? Do you have an S corp? That's considered income. What about, let's see, alimony? Did you receive any alimony? Now there's some specific dates about alimony, when it's included and not included. If that's your situation, we could talk about that in more detail, but there is a particular date that corresponds with alimony, okay? But that's considered income. Farm income. Did you got a farm? That's considered income. Unemployment. Boom. Okay? And then the last one, business income. Now this is where your business income and your expenses will come into play. That's where your Schedule C will come into play. So on the Schedule C, we will enter all the 1099s, all the cash, all the any income that's made in your business. Then you would also list your expenses, your cell phone, advertising and marketing, supplies, all of those things. And when you weigh them out, you take your income minus your expenses, then you get a number for your business income, and that goes up here. Okay? So your business income, your Schedule C, goes here, included in your wages. All right? So you're going to add all of these things up, and that's going to be your total income. You're going to see that on your tax form as total income. But then they give you adjustments to your income, not Schedule C, because that's already taken into account up here with your business income. But there's other adjustments that they'll let you make to your income. They look like educator expenses, okay? HSA deductions, self-employment tax. If you are a creative, if you are self-employed, you have to pay self-employment tax. Self-employed health insurance deductions. If you are self-employed and you pay health insurance, you can deduct that, okay? Student loan interest. If you've paid it, you can deduct it. Simple plans, set plans, and qualified retirement plans. You get to deduct it. Make an adjustment, okay? If you are part of the armed forces, moving expenses is an adjustment to your income. IRA deduction. Tuition and fees deduction. And then, this is something that a lot of people don't know. I'm glad that I do. There's a form called Form 2106. It is business expenses for performing artists. You get to deduct that. Okay? So all of these adjustments to income you subtract from your total income. Got it? That's going to bring you your adjusted gross income, most commonly referred to as AGI. Now you talk about standard deduction versus itemized deduction. The standard deduction for single people is $12,400. For head of household is $18,650. And for married people is $24,800. You get to subtract that from your AGI. So it's 12,400. 18,650 or 24,800. Okay? Standard deduction. Single, head of household, married. Your itemized deductions are going to be your charitable expenses, charitable contributions, real estate, property taxes, mortgage interest, those sorts of things. If they do not exceed what the standard deduction is for your filing status, then you're better off filing using the standard deduction, okay? Because they doubled this in the last couple of years, it is kind of hard to exceed the standard deduction, all right? But once you figure out your standard deduction, you subtract that from your AGI. That gives you your taxable income. That number is the amount that they then figure how much you should owe in taxes based on that income. Okay? So, just to recap, your business income, your Schedule C, your business expenses, your business income minus your business expenses is something totally different than the standard deduction. Has absolutely nothing to do with the standard deduction, the itemized deduction, okay? This Schedule C, what I made minus what I paid is considered in your income up here. Does that make sense? I hope it does. Of course, after you figure out taxable income, then there's a whole second part to that. How much do you owe in tax? And then how much did you pay in tax, whether from a W-2 job or self-employed quarterly payments, that sort of thing. Then how many credits do you have? There's a whole second part of that. But I just wanted to break down where the business income comes in, where the Schedule C comes in, versus the standard and itemized deductions. They have absolutely nothing to do with each other. Both absolutely important, but they don't have anything to do with each other, okay? So, I hope this has been helpful. If you want part 2, after you figure out taxable income, what the backside of that form looks like, because that's definitely where it is. It's on the back. Then we can, I don't mind doing a video in regards to that, but I want to make sure that you understand as a business owner where your numbers come from and where they go. So if the only income that you have is your self-employed income, your business income, and that's all you have, then know that that's all that's going to be up here. That's all is going to be up here, okay? And then hopefully we have some adjustments to your income, and then you choose which, either the standard deduction or the itemized deduction based on what you have to claim and your filing status. All right? So until next time, peace.